We're going to be talking about a couple of aspects of the current coronavirus situation. And I wanted to begin by asking Thomas about whether companies are in good shape this time coming into the crisis, in particular because many firms have used the capital markets to term out their debt, extending their maturity profiles, which means that the burden of refinancing is a bit lower, perhaps. Thomas, what do you think?
Yes, I think companies in general are in better shape now, and especially the Nordic ones. As the capital market in Sweden is the tenors are quite short. We have a lot of money market funds that's dominating the market here. I think companies are more global now. They are having the capital market in other countries, so they have access to longer maturities. And we are an example of that. We have spreading out our maturities and issued bonds up to 25 years in tenors now. So I think in general, and more companies are having a rating. So they have they are forced by the rating agencies to spread out the maturities.
So, Thomas, do you think having access to multiple funding sources has actually helped companies, given that some of these funding sources maybe have come under stress?
Yeah, I think it's always good to have access to multiple funding sources because you never know which one is going to close down and how's the appetite in the bank market or the capital market. So it's I think it's always good to, like, even in good times, to do some bank loans, because when the capital market shuts down, you can access the bank market, and also to have the ability to finance yourself through green financing. I think it's usually in a good market, the difference between green and non-green finance isn't that large, but in a bad market, you can see the difference because there's so much demand for green financing and capital allocated to that. So from my experience, in a bad market, it's always better to have finance yourself through green financing.
And do you see a difference in price?
Yeah, and the price difference is larger in a bad market because then you can get, and we finance ourselves through green bonds, but we also have green loans with EIB and NIB, and they are like the strongest one in the market. So in bad times, they can finance themselves relatively cheap, and then we can get loans from that.
And you've done green bonds in this crisis?
Yeah, we've done. I think we only done green bonds in this crisis. It's an advantage to have access to green financing. And we signed a green loan agreement with NIB actually in the beginning of the crisis, and the price was really good.